Ruchit joins us for giving more on the technical view. Ruchit, welcome. Good afternoon. Ruchit Jain, lead research at 5paisa.com. Ruchit, what do we make out of the shallow recovery today? Certainly, the bargain hunting at lower levels was seen, but then considering today was Bank Nifty expiry and tomorrow being the Nifty expiry, VIX cooled off further. Can we expect a relief rally tomorrow?
A very good afternoon. Well, certainly today we witnessed a moves on both the sides of the trade where initially the markets were continued the negative bias, but then again a recovery and we ended with marginal gains on Nifty. But frankly, if we see the data is not turned much positive yet. FIs have significant positions on the short side with more than 67-68% positions in the index futures are on the short side. And also, if we look at the recent technical structure, then the index has given breakdown from a rising wedge pattern, and even the 50-day exponential moving average support has been breached. So it's too early to say that markets would form a support at today's low, and I don't think that we are out of the woods yet. I think the next major support where the market could try to form some support base would be around 21,500, 21,450 range. So I think we would continue to be a bit cautious. Tomorrow, if we get any kind of pullback move based on this global cues, then still at high levels, 22,000, 22,100 would continue to act as a resistance. And 21,500 is where we could expect the Nifty to head in the near term.
Right, so that's about Nifty, but then the bulk of the move that we saw coming in terms of the carnage that we've seen when we're looking at the broader indices, right? So what kind of move are you penciling in, and is the pain over for mid-cap and small-cap?
I think the price-wise first leg of correction may have been done, but we have not seen any time-wise correction yet. If you look at last move, then markets, the mid-cap and the small-cap space has rallied right from last April till mid-January this time. So I think still some maybe 2 to 3 weeks of time-wise correction is still left. There would be some stocks which would try to form a support base. Of late last 2 or 3 trading sessions, some of the mid-cap and the small-cap names have witnessed a price up move supported by good volumes, but very selective ones. So it's not that the broader market would be in a hurry to uptrend to resume its uptrend, but I think very stock-specific approach can be taken if one is looking to buy this dip.
Are you indicating, Ruchit, the way the smart recovery came in economy-facing stocks, sectors like capital goods, auto? Are you trying to say that they can recover from here, and would there be would the picks from these spaces only that you want to indicate?
Yeah, so I think one theme that could work out for fresh buying is look for outperformers in this corrective phase. So those stocks which have not corrected in last few trading sessions, that is where the real strength lies. And once the market resumes the uptrend, I think the outperformance could again be seen over there. So yes, as you mentioned, that capital goods is one of the sector where price volume action is strong. The down moves have been very limited. Even selective auto names have done well. You look from two-wheeler space, stocks such as Bajaj Auto is there, TVS Motors is there. I think not much volumes on the sell off. Maruti is trading at its all-time high. So these are indications that certain pockets, which are outperforming in this correction, they could continue to do well going ahead. So I think if one is looking to buy anything at current levels, then rather than looking for bottom fishing the stocks which have corrected very sharply, I think initial one should start with those stocks which are outperforming. And once we get enough signs that the markets have bottomed out and the next leg of rally has been assumed, then I think one should take an approach where the corrected stocks could be seen for buying.
Thanks, Ruchit. So that's where you're seeing value in the market right now, and that is the kind of picture that you're painting for us. But thank you so much for joining us on the channel on Your Trades.